Greetings, cherished viewers. I hope today is quiet and healthy for you. We'll talk about a crucial subject today for many individuals who are getting close to retirement: how to pay off debt before retirement. Because retirement, in a sense, marks the beginning of a time of leisure following many years of arduous labor. However, if you're still in debt, it could be hard to achieve this relaxation. Financial obligations like credit card debt, auto loans, and home loans might make life more difficult if you're thinking about retiring and you reside in the US or the UK. Since your income will be set and won't grow after retirement, paying off your debts may become much more difficult. How can you pay off these bills? Then, you may lead a lot more tranquil retirement if you pay off your existing bills and start saving before you retire. Let's take a step-by-step look at various methods for paying off debt and making plans for a secure retirement. Finding out just how much debt you have is the first step. Since it may be emotionally taxing, many of us avoid looking at our debts. You run the risk of allowing your obligations to get worse, though, if you are unaware of them. Credit card interest rates are often quite high, particularly in nations like the US and the UK. These interest rates have the potential to rapidly raise your debt and put further strain on your finances. The first step in doing this is to make a list of all your debts and check their interest rates. Your method will be more effective if you can determine which loans are costing you more in interest. When choosing which loan to pay off first, caution is necessary. For instance, your credit card debt and house loan debt can differ significantly. Because credit card debt has high interest rates, it's typically a smart idea to pay it off first. Credit card debt may increase rapidly, and the interest that accrues over time can make the issue worse. Therefore, the first step to financial independence is to pay off this debt first in order to remove the interest load. Regarding your house loan, it can take longer to pay it off if you're making payments on a long-term, low-interest loan. Paying off low-interest loans later allows you more time to begin saving because they are typically easier to handle. In this situation, it makes far more sense to make paying off high-interest loans your first priority. You may proactively begin paying off your obligations and make great strides towards debt relief by starting with this first step. Setting aside a specific amount of your money for debt repayment is another smart way to pay off your obligations. This is a crucial step in lowering your debts as soon as possible. You must, however, be quite conscious of where your money is going before making this move. To safeguard your financial future, it may be crucial to begin debt repayment prior to retirement. A fixed income might make debt repayment more difficult, particularly in nations like the US or the UK. The cost of living and other costs may consume a significant amount of your income, depending on where you reside. As a result, it's critical to examine your expenditures and eliminate wasteful expenses. For instance, cooking at home rather than going out to dine is a very cost-effective approach. You should also carefully examine your utility bills, including those for water, electricity, and other services, and search for methods to cut costs in these areas. Over time, little adjustments might have a significant impact. Avoiding needless power use, for example, can drastically lower your rates. When living on a limited income, many retirees often have to pay for additional costs like health insurance. This may be a significant hardship in old age, particularly in the United States. You should obviously adjust your budget now to reduce these health-related expenses in retirement. You may accelerate your debt payback and increase your retirement savings by cutting back on wasteful spending. In conclusion, you must control both your income and spending if you want to pay off your debts. Making little saves during this phase can have a significant impact and lead to a more comfortable existence later on. Making a payment plan to begin repaying your debts is a crucial next step. This plan will take you through the process of paying off your debts and help you arrange the sequence in which you will do it. This procedure will help you pay off your debts and manage them more easily. Credit card debt should often be the first issue for American retirees. This is because high interest rates on credit card debt can lead to rapid growth and exponential debt accumulation. In this situation, you may rapidly reduce your debt load by paying off credit card obligations first. You may devote a larger portion of your budget to paying off other obligations and achieve financial independence sooner after your credit card debts have been paid off. Although mortgage loans in the UK often have lower interest rates, they might take several years to pay off. This necessitates a longer-term strategy for mortgage debt repayment. You may postpone these obligations until later in your repayment schedule, though, because low-interest long-term loans are typically easier to handle. Your financial load can be reduced by using a realistic plan to pay off your mortgage. You will eventually be able to pay off a significant amount of your obligations and experience financial relief in retirement if you implement a payment plan. Although this approach could be a little challenging at first, following through on your strategy will help you get closer to financial independence in the future. Keep in mind that every step you take will make your retirement more comfortable. Many people choose paying off their debts above saving money. But conserving money is also one of the most crucial aspects of debt relief. Building a financial safety net for the future is just as important as paying off current obligations. You must carefully balance the amount you set aside for savings and debt payments if your income is fixed. Reaching this equilibrium will enable you to pay off your obligations and establish a strong savings base for your future requirements. After retirement, Social Security and other sources of income are frequently restricted, particularly in America. Retirement financial issues may result from this. In a similar vein, the government pension in the UK can stay at a specific level and not be sufficient to maintain your way of life. Thus, establishing extra revenue streams and beginning to save early will be crucial to guaranteeing your financial stability. You may live a far more pleasant retirement by planning and saving for it. You may begin saving gradually and increase your savings over time by making your own savings plan. Your future quality of life will significantly improve if you consistently save for retirement. You will safeguard your future during this procedure while you pay off your obligations. In conclusion, you may enter a more financially secure future by striking a balance between saving and debt repayment. This will enable you to swiftly pay off your bills and provide the groundwork for a cozy retirement. Low-interest debt is another recommendation. You could think about restructuring your present loans if the interest rates are excessive. For instance, you may save a lot of money by using a low-interest loan to pay off your credit card debt. Given that credit card debt may be a major financial concern in both the US and the UK, this approach is especially crucial for retirees in those nations. Your ability to be financially independent may be hampered by high-interest loans. You may, however, pay off your obligations more quickly and pay off a lot less interest with this kind of restructuring. Last but not least, you may generate extra revenue to improve your quality of life. Many retirees might supplement their income by taking up tiny side jobs. Many people in the US and the UK who are getting close to retirement age use their hobbies or prior work expertise to supplement their income. For instance, a music instructor may provide lessons online, or a crafter might make money from their pastime. You may use this extra money to pay off your debts more quickly if you have comparable opportunities. Furthermore, even while Social Security payments offer solace in retirement, having a reliable source of additional income can improve your chances of paying off debts ahead of schedule. Additionally, some people can use their expertise to freelance and make money. You can more safely prepare for retirement and pay off your debts more quickly with this extra money. In conclusion, there are easy actions you may take to pay off your obligations and start living comfortably in retirement. First, make a comprehensive inventory of all your obligations. Rank them according to interest rates, cut back on wasteful spending, and make a payment schedule. You may also pay off your bills by saving money. reorganizing high-interest debts, and looking for other sources of income. Having no debt to worry about when you retire will allow you to enjoy a tranquil life. Remember to subscribe to our channel if you found this video useful.